How are we doing, everyone? Welcome back to the course. In this video, we're going to be talking about the different resources that we use for fundamental analysis. So I'm just going to be showing them live in action, just to show you the different websites that we're going to use and how you can actually go about using them. So we have our three different types of fundamental data. We've got central banks, geopolitical events, and economic data. Okay, we've outlined these in the chapter, and we've outlined how we use each. And now we're just going to look at the resources on how you find the actual information for each one. So the real starting point for your fundamental analysis is going to be heading over to an economic calendar and getting in line with the upcoming fundamentals. The economic calendar that I personally choose to use myself is Forex Factory. Okay, this is, in my opinion, the easiest to use, the easiest to filter, the easiest to outline all of that important data. So that is actually what I use. There are a few more, and we've got FX Street as well, and Daily FX are notable ones. But to me, these ones are not quite as pretty. This is one I used to use, but I soon switched over to Forex Factory, and I've stayed there since. So this is where we begin, because this is where we're going to see economic data and central bank data as well, all lined up in a calendar, ready to actually trade. So first thing we're going to do, head over to Forex Factory, head over to the calendar, okay, which is the economic calendar. And then what we can do from here is actually filter the information that we get, right? We can filter that expected impact, and we can also filter the currencies, okay? And we can filter the event types as well. So if we look at the chart for the week here, the calendar for the week, we can see it's absolutely packed full of information. So much data. But the thing is, so much of it is very low impact that we're not really going to need it inside of our trading, okay? And this is exactly what I've spoken about in the other episodes in the chapter. This low and medium impact data rarely ever actually causes a notable effect on the market and is likely to never really sway our trades. So what we only want to focus on, what we only need to focus on is this high impact data, okay, these red little factory symbols. So what we're going to do is just filter out all of the lower impact data. And then we can actually go ahead and filter the currencies that we're going to be using and not using, right? So for example, myself, while I don't trade all of these, I will be leaving them all on because they do correlate with one another, except for the Chinese yen. Okay, this is something I'm not interested in. That is not something that I trade and not something that's going to affect me. So chopping it out of the calendar just helps to filter it down even more. When it comes to the event types, I will not be filtering any of those because if we do, we're going to miss one or two. We could miss some very high impact data. We don't want to remove any of that. You just filter by currency and the expected impact as well. So my recommendation for you is probably just set it up exactly how I have, okay? High impact data only and all of the currencies except for the Chinese yen, because this rarely ever comes into play. Well, it never comes into play inside of my trading. So when we do that, we can see that the calendar is much more relaxed and well laid out, more refined as well. We can then select the dates, right? We have the month of July, and we can select any dates. We can even go back, forward, etc. But what we're going to do is just keep this on the week, right? If you set it to the week, it should follow you week by week. That is what we need it on, really, because we only need to see the data around a week ahead. We only need to know what data is going to affect us in that current trading session. So when you have this set up on your week and also on your right filters, you'll have this refined list of information showing the times and dates, the currency that this information is going to affect, the impact it's going to have, which should all be the high impact, and then it actually says what it is, okay? If you click on here, you can get more details on the speakers, on the usual effect, etc., etc., etc. And we also have forecasts and previous data as well, okay? So this is very, very useful. We've got all the information we need in there. Now, this is the starting point, because what we want to do with it is find days where economic data is going to run wild, find high impact data such as employment data, interest rates, there's central bank information, okay, interest rates and monetary policies, and find those so that we can filter them into our trading and be prepared for them when they actually come around. So what would we get from the coming week then? Essentially, what I'll be looking for here is that high impact data that I really think is going to have an effect. And what I'll be looking at this week is, of course, central bank speech. Okay, this is at 4:30 on Monday. This is likely to drive the Great British Pound. This is going to drive the Great British Pound, as we can see here. And as it's a speech, there's not much that we can actually gauge before it happens. So we can use the outlook of the speech, we can use the headlines and the aftermath of the speech to then find direction for the pound. But this would be used to simply filter the pound. Okay, we know that if we're trading the pound through 4:30 p.m. on Monday, we are going to be removing the risk from our positions and putting the stop loss to break even, or we're going to be avoiding the trade or getting out of trades altogether to avoid a big spike and an instant loss. Okay, so that is how we're going to use this data. That's what I would mark. My first note of the week will be 4:30 p.m. on Monday. We're going to cut trading on the pound or risk-free at any positions that we do have to avoid taking a loss as a cause of a spike of this. So that is the first note of the week. Tuesday then, a free day, that's cool. We should be called to trade through that, no problem. But then when we hit Wednesday, we have some interest rate decisions and monetary policy statements from the Bank of Japan and the Bank of Canada. Okay, so these are going to be big pieces of information for myself. Interest rate decisions are, of course, central bank data, very important, and the monetary policy statement that comes with is also going to be quite important. So Wednesday is probably going to be a day to avoid the Japanese yen and the Canadian dollar until we've seen those data come out and until we can actually gauge the reaction and the reasoning behind the monetary policy changes and any interest rate changes that we may see. So definitely going to be noting down those interest rate decisions and monetary policy statements on Wednesday. Now, Thursday also has interest rate decisions for the Eurozone. Okay, we have ECB press conference, we've got monetary policy statement, and we have an interest rate decision from the European Central Bank. Australian dollar employment change and unemployment rate data as well is going to have quite the effect upon the market. So the central bank data is what we look for first, and then anything regarding employment. Okay, employment and labor markets can have a huge effect on the economy, so it's definitely worth watching and looking for. So from there, then the lower impact stuff, the economic data that we've spoken about, things like core retail sales and retail sales over here. That's pretty much the only lower impact data, economic data that we've got for the week coming up. So that is pretty much how we're going to run through the calendar. Okay, you just want to pinpoint those important central bank datas and also pinpoint any economic data that's likely to cause movements in the market. When you've got all those outlined, you are ready to then go ahead into the trading session, into the trading week, knowing that you're not going to get caught up on any of this information. Okay, so this shows a pretty big week for data, right? We've got multiple monetary policy statements and interest rate decisions, and normally we don't have that much data. We maybe have like one crazy week each month where there's a big bombardment of data. Sometimes we have more, sometimes we have less. And weeks like this really shine on why we actually do this, checking the economics. Let's say you were to not check any calendars and you've got no idea what date is coming up. You're going to trade as normal. Through Monday and Tuesday, you'll probably be okay. But come Wednesday, if you trade the Japanese yen or you trade the Canadian dollar, chances of you getting hit there with a loss, a fast spike leading to a loss, are quite high. Okay. And then on Thursday, once again, if you're trading the euro, chances are you're going to run into some losses because we've got consistent data from the euro, interest rate decision, and monetary policy statement, which normally cause quite a big drive in the market, and then an ECB press conference 45 minutes later. So if you're not keeping an eye out, you're probably going to take quite a few hits this week, okay, mainly on Wednesday and Thursday, which could really mess up your whole week's session and really wipe clean your results that you've gained earlier in the week. So being able to filter the data like this and being able to understand when the data is going to come up and what currencies you should and shouldn't avoid trading really is going to give you that edge. So this is where we're going to begin. Forex Factory or any other economic calendar of your choice, and just filter that data at the start of each week, usually on the weekend, and get to grips with the economics coming up so that you know what data to dodge and what data could potentially provide some interesting opportunities in line with the trend and in line with your technical analysis. Cool, that's where we begin. Now that we've done that, we're just going to quickly talk about keeping up with the actual data and the actual geopolitical events that come out and that are happening in the world as we go. So an economic calendar is going to be very important. And second on from there, then we're going to be looking at the monetary policy statements from the different central banks. And some of you won't do this, and that's okay. If you don't do this, that's okay. You can trade technicals alone, but if you do want that extra clarity and that extra confidence and the extra sense of direction in the market, it is actually very valuable to go and check these monetary policy statements out. And they're really not that long. What I've got up here is the Reserve Bank of Australia and the Federal Reserve, okay, which is the US central bank. And simply typing in, if we go back here, simply typing in, RBA monetary policy is going to take you to the closest one, right? The government websites normally have these listed. For example, we've got the RBA website here, which is the Reserve Bank of Australia's website. If we were to just type in this, jump on here, and we can actually go and check out then the statements, right? So the Reserve Bank websites and the central bank websites are going to show you monetary policy decisions, and then if we dive into them, we can actually see the reasons, okay, the reasons why interest rates have been changed, and the current economic outlook for the different economies, okay. Looking at this one then, key pointers that we can take away from this monetary policy decision. So we're looking at coronavirus, right? Coronavirus continuing to cause a downturn. Many people have lost jobs. There's been a sharp rise in unemployment. So a lot of flags suggesting the worst of the global economic contraction has now passed. Okay, the outlook remains uncertain. Recovery expected to be bumpy and depends upon the containment of the coronavirus. So you can see the coronavirus there acting as a geopolitical, playing in the market and causing uncertainty, right? Globally, conditions in the financial market have improved. Volatility is declining. There's been a large raise of debt and equity. Prices of assets have risen substantially despite the high level of uncertainty about the economic outlook. Bond yields remain at historical low levels. So you can see that this really quickly gives a good overview of everything that's really happening in that specific market, okay? In Australia, the government bond markets are operating effectively, and the yield on 3-year Australian government securities is at the target of around 25 basis points. Given these developments, the bank has not purchased government bonds for some time, with total purchases to date of around 50 billion. So this then leads on to the bank is prepared to scale up bond purchases again, do whatever is necessary to ensure bond markets remain functional and achieve the yield target. So this really shows that the bank is prepared, the Reserve Bank of Australia is prepared to continue pushing money into the economy to stabilize the currency, okay, to stabilize bonds. So we can see that the Australian economy is fighting back. Okay, the Reserve Bank of Australia is fighting back against this coronavirus and against the effect that it's having upon markets. Understanding this information gives you a good standpoint idea of where the RBA are and where the Australian dollar really stands. So the Australian economy is going through a very difficult period, experiencing the biggest contraction since the 1930s. So you can see here, this is very big information, and you can see that the Australian dollar is at an area of weakness. This is something that you just wouldn't have known whatsoever without looking through this, okay? Since March, 800,000 people have lost jobs. You can see then that unemployment is rising. Unemployment is rising. There's lots of uncertainty, and there is going to be a lot of stress on the Reserve Bank of Australia, okay? So this is a statement from the governor of the monetary policy, of the Reserve Bank of Australia and the monetary policies. And it's definitely worth looking through this just to keep up to date with everything: inflation, labor markets, jobs, economic recovery and rebound, things like this. You're going to get a very good outlook on the overall performance and condition of the Australian economy. Okay. Another example then we have the monetary policy report from the Federal Reserve. So this one once again is talking about COVID-19 and how this has pushing a lot of hardship into the United States and the rest of the world. So we can see unemployment rate, which has been at a 50-year low, has soared to a post-war record high. Right, weaker demand, significantly lower oil prices are holding down consumer price inflation. All these things giving us a very quick, brief, and effective overview of where the US stands, the US economy. And then we can see, diving into the economic and financial developments, we can learn about economic activity, labor markets, inflation, financial conditions, financial stability, international developments, and then easing monetary policy, safeguarding market functioning, and things like this. Okay, so basically, we're going to be seeing what's happening as a result of geopoliticals and a result of the monetary policy and how it is working. And we're also going to see what they're changing in response to developments, okay, in response to anything that's going down right now. So that is how we're going to use these. We can simply search them up. All it takes is a quick 5 minutes to just skim through, to read through, and you can find quite a lot of information in here. And while we are going to be trading technicals 80%, as we've spoken about, these fundamentals and just having this insight into how each economy is performing definitely gives you that little edge and that confidence booster when it comes to actually placing trades and finding trades. So if you want to trade in line with the trend, it's definitely worth checking out the interest rate decisions and checking out these monetary policies to see what's changed and how things are working. That is really how we're going to keep an eye on geopoliticals nice and easily, as well as other things like economic data and the effects that geopoliticals are having upon economic data. So monetary policy statements, as mentioned, these central bank pieces of information, they really are gems. You'll be able to find these for pretty much all of the central banks that we've spoken about, and I definitely recommend you do. You can even download this. Look, very nice. So that is pretty much that. Okay, go check out these. Definitely keep these in mind while you are doing your trading, while you're doing your weekend preparation. Go check out your economic calendar. Find the information coming up. Find the currencies it's going to be affecting. And then shift your focus over to these monetary policy statements and just have a look at the geopoliticals and the overall economic standpoint of each global economy and country. Now, another thing, real quick then, is if we jump over to a website like FX Street or Daily FX, we have this Forex news, okay? And what I want to mention is the importance of not getting sucked into this, right? Let's have a look at this. We have GBP USD battling to extend gains beyond 1.26. USD ZAR price analysis, GBP USD to test the 200 DMA. Okay, all of this thing, to be honest, is not going to be valuable for you. All of this thing is actually probably just going to distract you from your own analysis, distract you from the actual monetary policies and overall trend, and also distract you from your own technical analysis when you've done it. So I would like to say, when it comes to things like these individual articles about currencies and where they're going to go next, probably don't get too involved with those, okay? If you see things about, actual news, things that's going on in the world, let's take a look if there's anything useful on here. Okay, stuff like this. Saudi Arabia's oil exports in August to remain similar to July levels. So this could give us a nice insight on oil and demand and supply of oil. But then when it comes to things like this, GBP USD to test the 200 DMA, that is not really so valuable. Okay. This one, again, news stories, you can look at those. News stories, look at them. Take them with a pinch of salt, but definitely go ahead and check those out. You can gauge supply and demand of different assets by reading these. But when it comes to these actual other people's technical analysis, like this one, for example, this is kind of not really something that we want to go and look at. They're just going to be talking their own opinions and their own analysis. So let's just do a quick recap then when it comes to the fundamental resources. First of all, you want to find a nice economic calendar that you're happy to use. Plot out your different currencies, plot out your different data, and then prepare your watch list for the week. And then when you've done that, when you found your central bank and economic data that's going to be playing a part, you can head over and check out recent monetary policy statements and news to get in line with geopolitical events and geopolitical issues that are going to be affecting currencies. And then you can also head over to different news websites to keep up to date with geopoliticals from there as well. Over time, you'll get a hang of the fundamentals a bit more. But like I always say, we want to keep this around the 20% of all of our trading. Major focus is going to be on the technical side of trading, and that's where we're going to put all of our main focus. The idea of using these fundamentals is just for additional clarity, additional confidence, and logic when finding new trades, okay? So that's all for this video. Hopefully you have enjoyed, hopefully you found value. Hopefully now you can go and use these tools comfortably. And also, hopefully you now will go and check out some monetary policy statements. It's honestly something that is way overlooked. I do like seeing the information inside of these, as it really gives you an idea of whether or not, for example, the Australian dollar is going to go up or going to go down, versus, say, how the US dollar is going to go up versus going to go down. So yeah, that is all for now. Thank you. Hopefully you've enjoyed. Hopefully you found some value. Definitely go and do these things. Go and check them out. Go and check out Forex Factory and the Forex Calendar, or FX Street, Daily FX if you prefer to try one of those. Bloomberg as well. Forgot to mention this is a great one for that news. Okay, if we head over to Bloomberg, we've got a menu here. We can look at the markets, we can look at the FX, okay? And then we're going to be given things, lots of news stories, right? More so news than the biased individual opinions like what we saw on FX Street there. Yeah, Bloomberg is a good place to check out these little news stories, see how they're going to be affecting individual currencies. So thank you for watching. Thank you for enjoying and enduring all of the fundamental analysis chapter. In the next chapter, we will be shifting into technicals, where we're going to be getting on the chart and in the field and really ready to smash the markets from a technical in the field standpoint. So thanks for watching, and I will see you later.